Sign up today.
The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good afternoon, folks. Welcome to the October 23rd, the fantastic Friday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Hey, let's make sure we have an extraordinary one. And the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We'll go figure out what those bulls and bears and those buyers and sellers, what they're communicating to us at just past 1 o'clock in the afternoon. I do want you to know that I am absolutely grateful for your presence here. But more important than that, during this next 60 minutes, I'm here to serve you. So feel free to pick up that phone. You can dial on in 877-927-6648. If you can't dial in, we've got you covered there too. You can go ahead and send me an email, steve@tfnn.com. Please send it in early. And inside that subject heading, if you'd be kind enough to put radio show question in our Tiger's Den, well, any ping will do. So let's go ahead and get this show started on fantastic Friday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got a little bit of a mixed bag out here. When I say a little bit of a mixed bag, transports are leading to the upside of 77 points. Rest of the indices are trading lower. Dow's off 143, S&P 4, NASDAQ 28. Russell's almost flat. And so I just want to go over this once again. We took a quick peek at it during the 1 p.m. update. And for all intents and purposes, the S&P 500 is bearish and has a change in trend signal. Now, it's a change in trend on a daily basis because price is still above the top of its weekly profile. So we've got different messages for different time frames. But be that as it may, it still doesn't matter. Price is below the bottom of bullish structured daily profile for the ES Mini out here. ES Mini is down 8 points right now. But this isn't like something that just took place. This has been all morning long out here. It's not something that's taken place in the last 10 minutes. I've got to try to find my cursor out here. And that's this. The market breadth for the S&P 500. And by market breadth, we're using our TAS market breadth. So just step back for a second. Actually, I'll do it like this. Let me come. Actually, I think I've got I still might have a chart. Let me see if I go all the way back here. I prefer to find that versus have to rebuild it. Is this it? Nope, that's not it. Is this it? Yep, this is it. Okay, so here is the ES Mini. And as far as the symbol, it's my synthetic contract out here. But it's going to show you the value and the importance of understanding these task market profiles. So if we just simply come back into the February time frame, the first close below the bottom of a profile took place on February 24th. The signal there, a change in trend signal. Obviously, the market went down, made a low on March 24th. You don't need me to tell you about it. But with regard to these market profiles, we were having a discussion yesterday in the den, mostly by text or what have you. But the bottom of these boxes here are so spectacular because without them, we don't understand on May 4th, as price was pulling back, what was it doing. In fact, there was a 2-day or 3-day pullback out there. What was it doing? Well, it was testing the bottom of profile, testing support. We saw that same type of activity. This is a bullish structured profile here too on May the 14th. Each of those being buying opportunities. But when price does close below the bottom of profile, as it did here back in June, we had kind of a choppy period out here, but still a change in trend type of signal. Likewise, when you close above the top of a profile out there, you've broken through resistance, so you're in a strong bullish mode out there, or potentially a strong bullish mode out there. So we're down below the bottom of the profile. We saw that last time was on September 4th when we saw a close below the bottom of profile. That led to the September 24th bottom out here inside the Dow. Now we're looking at the ES Mini that did generate a Gartley buy pattern. So So we can see this, and it's helpful to understand this. Now, we're down below the bottom of bullish structured profile on a daily basis. Yet if we look at the market breadth for the S&P 500, again, we're still using TAS tools out here. So here's the daily time frame chart. I'll just populate this. Right now on a daily basis, what we have are 188 instruments on a daily basis where price is above the top of the profile, and only 94 instruments where price is below the bottom of a profile. You kind of get my news, or when I say I'm confused, I'm telling you I'm confused. Now, usually when you're confused, it means you're about to learn something. So I'm about to learn something. I'm just not sure what it is just yet. But I'm absolutely confused to sit here on Friday at 1:11 in the afternoon and be able to tell you with conviction which way these markets want to move based upon the signals, because this is abnormal. This is not normal for us to have change in trend signals inside the ES meeting and yet take a look at gigantic market breadth on the daily time frame. Now, not that that can't change, but as we speak right now, that's the daily time frame. Look at the weekly time frame. Let's pull this open. So on a weekly basis, where are we at? We have 226 instruments. This is hard to do, folks, that are trading above the top of their profile and 49 trading below the bottom of their profile. Now, when we looked at this, is I guess more easy to understand, because when we looked at the daily and weekly market profiles for the ES Mini, we saw their price, or I mentioned price, was above the top of the weekly. So this one's more understandable. I get this. But still, this is gigantic, positive market breadth out here. If I look at a 4-hour time frame chart, 238 above, 100 below the bottom of the box, and on a 60-minute basis, a 1-hour time frame, 267 above, 78 below. So yeah, I'm confused. You should be confused. But I want you to be confused because of my confusion. I just simply want to share with you I'm confused, and you should be confused for a different reason. Does that make any sense? Absolutely not. But, I used up 30 seconds there. Well, you sort of get the gist. So totally confused. Now, here's another thing. The Wilshire 5000, as John in the Tiger's Den will tell you, he will say, hey, if you want to understand what's going on inside the U.S. here, go take a look at the Wilshire 5000, because that's what represents U.S. companies out here. So here's another oddity, so to speak. Yesterday's price action in the Wilshire 5000 generated a 0.382, it was really 0.357 or thereabouts, but a 0.382 Gartley buy pattern. That's the green shaded area that we've got in my chart out here. Let me just go ahead and get rid of that. And in a Gartley pattern, you need an A to B equals CD to the downside. And you're looking for these patterns where you've seen a strong move. Shoot, even off of September 24th, inside of the Wilshire 5000, there has been a strong move higher. So you need your A to B equals CD. We got that yesterday as price got down to the 35,231 area, but you need more than that. And the more than that you need a bullish reversal candle. And voila, yesterday being a nice bull sash candle. Now, the Wilshire 5000 is not out of the woods, and you know why it's not out of the woods. And the reason is why? Because price still isn't above Stevie's green line out there. So it has acted as resistance. So we're really kind of neutral here with regard to the signals in the Wilshire 5000. Well, shoot, we're sort of neutral with regard to the S&P 500 as well, right? Based upon profile market breadth are saying, folks, gargantuan positive market breadth in the S&P 500. All time frames. I am absolutely confused as to the message of the markets. Steve Rhodes with TFNN. We'll be right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. So let's go take a look at some instruments here, maybe something that we won't be so confused about. And we've got about 3 questions here that are in the queue at the moment, all by email, which is great. Let's go to Robert B's question first. He says, hey, Steve, I'm considering taking a long position in XOP for an intermediate, and that's probably the key, intermediate term trade. Is this a good entry point? So let's go take a look at the XOP. And so when somebody says the word intermediate to me, I think weekly type time frames, weekly to monthly, but not necessarily the daily, although we would use the daily to assist us in, first I should not put up Akamai. We'll do that. That was from Mike in Sarasota. Let me get to XOP out here. So let me get the right profiles out there. So I'm thinking the weekly type time frame, but we would use the daily to generate our signals, our signals out here. So here's what we know about the XOP right now for Robert. On a daily basis, yesterday was a close above the top of that profile, so that's a positive out here. Price pulling back a little bit today, but price is below the bottom of its weekly profile. And that's kind of a bummer for you, Robert, with regard to this question, because on an intermediate term time frame, other than trying to find a TD9 breakout level of support or something along those lines from a profile standpoint, we don't have it. And so for me, in not knowing that you're considering the intermediate term time frame, we better find a real good reason, and we may find that reason on the weekly time frame. On the monthly, price is just consolidating with inside its monthly bearish structure profile, the bottom, which is 36.32. That's still open or game out here. But as long as price on the daily basis remains above 43.78, 36.32 will not be game. So that's one way to take a look at it. Okay, so let's see if we can. So now we know what profile information is telling us. That's clear. Let's go begin taking a look at our bottom and topping tool finder and additional support and resistance areas. So here, we take a look at XLP. Robert produced a beautiful bottom. What do you mean a beautiful bottom? This isn't like a Trump. This is a beautiful wall or something like that. We're talking about a bottom formed by patterns. two patterns: the TD9 count. It was bar number 9 that identified the bottom, as well as a Rhodes momentum indicator signal. And all that took place on one day, and that was really, Robert, your entry point into XOP. Now, price was still trading below Stevie's red line, so it wasn't really completely confirmed until the next day when price got above it. What we also know, though, is that at 46.20, 46.20 is a TD9 breakdown level. It was tested once, October the 9th. It held. So that is your resistance. So from there, we have no idea whether price will break through it or not. So when you say is now a good time to enter from an intermediate term time standpoint, actually your better time to enter, when we take a look at the XOP chart, is with price down at Stevie's red line, like it was yesterday, the day before that, and the day before that. So now it's because the reward risk doesn't make sense, knowing that 46.20 could be your resistance level. So with regard to on a daily time frame for XOP, 42.72 right now is the price area. Again, Stevie's red line out there. Whether price will get back there or not, I'm uncertain. But let's look at the weekly time frame chart and see if we can find any solid reason here to go ahead and take the trade. Now, on the weekly basis, this formed a weekly TD9 bottom and a weekly TD9 top out here. So that's a beautiful thing. Unfortunately, right now, there is no TD9 pattern at all. And all we have is price pulling back to to test Stevie's red line on a weekly basis. That was a few weeks ago. The entry point in XOP on a weekly or intermediate term time frame would be 34.63. I don't have a compelling reason with price trading below the bottom of that weekly profile for XOP to say that now is the time out there to enter that trade. On a weekly basis, I don't have anything else here to assist us with that. So I'll come back here. I would say your entry points would be between 42.73 and 43.79. 43.79 happens to be the top of the profile out there. With regard to the 30-minute time frame chart, will price continue to pull back? Let's just pull open. Oh, actually, I guess I have it on this chart here. I don't need that separate 30-minute. I added a tab specifically just for Robert out here. So now we've got the 30-minute XOP. I don't have really a top other than, and this could be a top. It's not when I say a top, in this case here, price getting up to resistance and then deflecting downward. And the resistance level of 45.25, that's a screen line established by a TD9 breakdown level. We can see that held. Right now, price is inside a bearish structured 30-minute profile. So XOP should make a run for 44.10. So if you really have a hankering to get into it, let the 30-minute chart get down to at least a level of support. And if price closed below 44.10, 42.53, which in essence is yesterday's low, would be your entry point. That is the breakout level inside of XOP. Now, what I would share with you, let me do this here, is I'll just pull this up on the screen, and we'll do it this way. In the energy sector, to the extent that you want to play it out there, if you take a look at XLE, the setup on XLE, Robert, from an intermediate term standpoint, is a better setup. And the reason that Stevie says that is as follows. This is a better setup right now. And I would not hesitate to say, okay, go ahead and pull the trigger on XLE now if you'd like. And the reason would be, yesterday, price got back inside the profile. And right now, as we speak, inside the XLE on a daily basis, price is trading out at 30.21. And the bottom of its profile is 30.19. I like that. So prices pulled back to a level of support. Robert, I don't know if it will hold during the day or not, but what I like about the intermediate term time frame that you had asked about is that we have a bullish structured profile on the weekly time frame. And now we know where support is at here. And the reason that that's helpful is because if we see a close below a weekly bullish structured profile, what do you think we would do on a long trade? We would jettison that position. Granted, it's weekly, and you almost have to let that play out for the week. But you know if price starts trading below that, it starts to get questionable. So that's at 29.11. That's about $1 away from where it's trading right now. You've got the potential out here of 37.28 on that weekly profile. And I would say between XOP and XLE, XLE from an intermediate term standpoint is the one to take a position in. So I hope that helps you out with regard to that analysis out there. Of course, there's no guarantees. It's certainly no. The only guarantee is I will give you absolute honest answers because I'm just narrating the charts. And so I'm trying not to inflect my opinions about everything, although every now and then I kind of throw in a little, joke or something. Maybe it's not even a joke, but a statement about something, just to keep everybody on their toes out there. Okay, hope that helps you out. So now Michael had put in a request out here, and Michael he's looking for a setup on Akamai. So with regard to Akamai, that's AKAM. Like, I'm going to give you the data, narrate the charts, and tell you what they are communicating to us, and then you can go ahead and then figure out your trade. So with regard to Akamai, we begin like we do with everything else, and I like using, even though I can show these profiles on my white background charts, just like starting here. Because it's a quick snapshot. You get the daily, you get the weekly, and you get the monthly. So it just really gives us a flavor for what's going on inside of Akamai, if that's how you pronounce it. Well, I'll tell you what's going on. Price is below the bottom of its daily profile. That says price may target the top of the weekly profile, and that's at 101.64. And price is inside a bearish structured monthly profile, suggesting that price may make its way to 88.63. Mike, we'll take a look at my other charts when I get back, and we'll try to figure this thing out for you. And that's Akamai. Be right back. Back in the day, I joined the Hotel California in 2006, and like many of you, was drawn in by, as well as,
whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us, and Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step-by-step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So we're taking a look at Akamai out here. We take a look at this stock chart. A couple of beautiful topping signals that were generated back on July 21st. And first, a nice Rhodes momentum indicator pattern, dark cloud cover confirming that. We had a nice little TD9 count up at the high on September the 3rd. Pulls back and busts through its breakout level of 108.62 out there. But the very next day, it finds a bottom. And I don't know what was going on September 8th. We'd have to go back, look at the weekly charts and so forth. So I don't have a clear bottom reason why it bottomed there. But today is going to be bar number 7. We're back below that 108.62, but right here in the area where we have seen prior lows before. So maybe this is going to hold. But signals suggest that price should push its way down to 98.62, Mike, which is the next breakout level. Today being bar number 7 of a TD9 count says you could see a bottom on either Monday, Tuesday, or Wednesday. And I think you've got earnings sometime next week out there. So you do have a potential bottoming signal out here, but we can't make that call today. It's only bar number 7. The weekly time frame out here, the weekly time frame has generated a Rhodes momentum indicator top. Creates a nice key reversal, bear sash candle. Does this the week of, this is price moving higher, doing less relative energy. Does that the week of September the 4th out there. So you've got these signals that are taking place, but without the bearish reversal candle, you don't have a reason to take action out here. So, and then what happens is price on that same week closes below Stevie's green line, and it has remained below that. So it looks like what Akamai is trying to do is actually form an A to B equals CD to downside. Now we'll go take a look at volume. I'll go back to the other charts out there, and we can take a look at the volume metrics this week versus the swing point and so on and so forth. However, there is still support at 101.64. So on October 23rd, today, still you've got price below one level of support, but where's the next level of support? It's 101.64. Below that, 95.02. Below that, the 85.10 level. But the weekly's got nice confirming signals, and the monthly for Akamai also has a TD9 count pattern. And in this month, although this month is not over, we can see price is trading just slightly below Stevie's green line. It's a bearish structured profile. So if at the end of September, my price closes below this, Akamai headed to $88.63 or 75.18, where its last breakout level came from. So I was going to say we'd go take a look at volume from a weekly, a daily basis as price gets back towards that swing point. So the swing point of September 8th had 2 million shares. When that was being tested, it was being tested on September 17th with 1.2 million shares. And today you're down with 1.6. So you're moving lower with volume compared to the last time the price was down here, although it has tested and rejected the swing point from September 8th. And I hate to do this, but that's confusing. It's just simply confusing. Sorry about that. Maybe Stevie just needs a long weekend. I don't even know what a long weekend is. Well, yeah, a long weekend would be Friday and Monday. Anyway, I can't have a long weekend because we're here working on a Friday. And I plan on being here on Monday and working. In any event, Mike, so, price is pushing down versus the last time down with some more volume. And it looks like what Akamai wants is lower price out here. So I hope that helps you out. Thanks so much for writing in, and the best of luck for you on your trade setup. Dennis G writes in, and he's asking the question, where's support for the QQQ? So since he specifically asked about the ETF, we're going to go ahead and give Dennis the ETF. We won't even go take a look at the underlying instrument, so to speak, the equity futures contract. The first level of support, Dennis, for the QQQ series ETF is going to be at a price level of 276.30. Price is trading above the top of its daily profile. So when we take a look at that, when you trade above the top of a profile, above resistance, your message is that it is a bullish message out here. And that's the message right now inside of the QQQ ETF. The weekly chart last week closed above the top of its profile. It was 287.85. We're back below that now. So it says that was a false breakout. And this would say that price could pull back to the 261 to 266 level. So daily, you're looking at 276. Weekly, 261, 267, basically. Monthly, forget about it, because you're talking about $186 out there. So we don't have to worry about that just yet. Now that's taking a look at the QQQ series that way. We want to go ahead and do everything we can for Dennis to assist him with that question. That means we're going to open up Stevie's other charts here and take a look at the Qs. So we're not going to take a look at the NQ. We're just taking a look at the Qs. And the question is, where's support? Do we have any other support levels out here? And the answer is we do not on the daily time frame. So that says it's the top of that profile, 276.38. On the weekly time frame out here, what do we have? So this is kind of interesting. The weekly chart for the Qs, now I'll show this to you, is different than the weekly chart for the NQ. I suppose, and I didn't realize this, but today is clearly a day of confusion out here. And again, I'll show you why. On the weekly base, we had price moving higher due to less relative energy, but last week was a gap to the upside. That's a bullish candle. We don't have a bearish reversal candle just yet. Do we have price trade below Stevie's green line? We absolutely do. Does this say price could make its way to 261, 267? Absolutely. But we don't have a confirming sell signal on the Qs for the daily time frame. So now let me go show you what it is I want to show you out here. Again, part of the confusion. And usually it's not this difficult. But right now, it is this difficult. Oh, did I open that chart? I had some problems with my system here this morning, and yep, okay, I've got it. Okay, we're good to go. So now we take a look at the NQ, which I believe is much more important to take a look at, Dennis, than the ETF structure. And the reason is because what you and I want to do is, so technical analysis, I would say, is all about price discovery. And so for price discovery, we want all the information that we possibly can get. Well, when I say all the information, that means I want something that trades more than 6.5 hours, especially if it is, in essence, controlling what is going on. And this is where all the pattern recognition really comes from. Again, I say you don't have to trade the futures, but if you're trading the ETF structures out there, you must know what's going on pattern-wise inside the futures. Otherwise, you're going to really get a bunch of false readings. So I played along and we did the Qs out there, but Stevie is suggesting that the more important signal comes from the price discovery chart, and that would be the NQ, because we're trading nearly 23 hours of the day out here. And last week, we did get a confirming signal of a Rhodes momentum indicator top on the weekly basis. It was a shooting star. Now, shooting star is the opposite of a hammer. In a shooting star, price has to be moving in a direction higher. So you got to have a trend that's in place out there. That's the first thing. And then there's other makeups with regard to the body, the candle, size of the wick, and so on and so forth. Last week was a shooting star. The way shooting stars typically work is if they work, they're going to work. What I mean by that is that was signaling lower price. What do we have this week? Lower price. Price below Stevie's green line. That's at 11,715. This is suggesting that the NQ wants to continue to pull back out here. 93.48 is actually game over the longer haul out there. On the daily time frame for the NQ, we'll pull this chart over here. And as far as where support might be on this, it's really 99.20 would be the correct number out there. But I'm not going to go with you right now and say that is the support level. Today's going to be bar number 6 in a TD 9-count pattern. And look at all week out here, with the exception of Monday. Tuesday, Wednesday, Thursday, and Friday have been what? Small-bodied candles. You know what a small-bodied candle is telling you? Mostly it's telling you, almost similar to like a doji, the market is confused. It's confused, folks. That's why we're getting confusing signals. We'll be right back.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So we got a question out here from Melody. I think that's the first time I've heard from Melody, so thanks for writing in. And Melody wants to take a look at the euro. So Melody says, I'm short today and wonder where you see support and resistance out here. So let me do a couple of things. Let me just change a short-term chart here for you, because that's for the U.S. dollar, USD. Out here, and so now we'll go back to it. So I don't know what your time frame is that you're using for trading. Why didn't that work go? I know. Sorry about that. And I'll go to the daily first while this is loading. Okay, great. Okay, so you asked a very specific question. You asked where is support and resistance. And that's a very clear picture. So there's no confusion here when we take a look at the U.S. dollar, or the euro-U.S. dollar, with regard to providing Melody. You can do this yourself right now. So those of you that are watching in, you're watching this live on Tiger TV, you're looking at Stevie's white background chart. I want you to tell Melody, share with Melody, where is support and where is resistance? You're exactly right. Resistance, Melody, happens to be the high from 2 days ago. And that's at 118. If you want to know the exact number, it's 1.1882. I can even go deeper than that, but we won't out here. 1.1882. That is your first level of resistance. That's the TD9 breakdown level. Now, you're short. And we take a look at Stevie's charts out here. There would be 2 additional levels of support underneath that. The first level is the oscillator unchanged line. That's the green squiggly line. That's priced right now at 1.18. What you'll see is price hit resistance and pulled back over the last couple of days, and where it found support was at the oscillator unchanged line. Now, because it's green, Melody, on a daily time frame, it's bullish. You got resistance at the 118 level. We know that. But it's bullish. Price pulled back, tested and rejected the oscillator and change line. Price most likely, we'll go look at the short-term time frame to confirm this, price most likely is headed back to that 118 level. If, on the other hand, price were below 1.1800 as we speak right now, then we would say the next key level of support is the TD9 breakout area, and that's at 1.1663. So we can easily identify support and resistance. I threw in, hey, you should be careful because you're short the euro. Price pulled back on a daily basis and tested a key level of support. Now, let's switch to the 30-minute time frame and see what it is that we see out here. So as we take a look at it, price is got resistance, and this is on a 30-minute basis, at 1.1861 and 1.1863. And so, Mel, and I don't have any kind of a topping pattern for you. If anything, the pullback this morning, so not only on a daily basis was it testing Stevie's green line, on a 30-minute time frame, it was testing the TD9 breakout level, which price broke above at about 4 o'clock this morning. You can see that when you break above that, says you typically go to the next level. Well, that's in fact what took place out here at about 8:30 or 9 o'clock. So it did what it was supposed to do. Then it hits that resistance level, pulls back. And now old resistance, which was 118.26, has proven to be new support out here. So this could actually be setting up an A to B equals CD to the upside. We won't go there. But if price closes above 1.1863, I would suggest that you don't want to be short. However, what you have at your back, you absolutely have at your back, is the resistance level of 1.1882 out there. And so if price closed above that, then you would definitely not want to be short the euro US dollar. So hope that helps you out, Melody, and we'll look forward to hearing from you again. Of course, I probably will only hear from you again if, in fact, the information was good. Sorry, today weekend. I'm not sure what that meant out there. So, but in any event, hopefully the information I provided you is going to be able to assist you with that trade. So no questions. I don't know where we're at, folks. If anybody can hear me, not using the party line, call the police, social worker back. Got you. Okay, good. I'm on. All right. But boy, I don't have a clue where we dropped. Wow. Okay, well, it was taking a look at. Did everybody hear the review on Osisco Gold out there? Can't see the charts? Wow. Okay. Stevie needs a quick vacation here. So let's take a look at. So in any event out here, Tarpon, you didn't hear that? Jeez. Here's the deal. I'll give you because we're just about to go to a breakout here. Looks to me like it wants to move lower out here. The change, how that would change, would be price would need to go above 12.17. Hey, folks, we're going to go ahead and give you a bonus here because of getting kicked off the air here. We're going to skip the commercial break here in this segment. So thanks for doing that in the production room. That will be helpful. So this way, and here's what we're looking at, just so you can take a look at it and see it. Tarpon, see how prices. So it's generated Rhodes momentum indicator top out here. Price is below Stevie's green line right now. If price can close above that green line, you're back into a rising price oscillator above zero. That would be bullish. And I would say, okay, you make a run for the prior highs, or maybe you make them for the all-time highs out here. But as long as price remains below Stevie's green line on the daily, and it's just below it on the weekly, you've got downside pressure out here. And so it's suggesting that it wants to move lower. I wouldn't exit the position at this stage of the game. I don't have that signal necessarily. And as far as where price could head to lower, 1150 would likely be the target to the downside. But above 1217, if you see that, then price should head to the upside. So I hope that helps you out and appreciate your patience on that. Now, I do not have any other requests at the moment. So why don't we just go take a look at some of the usual suspects out here? Although, yeah, we'll just go take a look at some of the usual suspects. The usual suspects being typically gold out here. So we'll just do this. Let's just go switch over to our futures contracts out here and begin by taking a look at. In essence, I'll just sum it up for you. Gold is consolidating right now, and it's in between. What you're looking at the December contract. Panel number 2 from the left. Let me just turn off. Well, let me expand it. That'll be an easier thing. Well, okay, maybe it's not so easy. There we go. So there's the expansion. So you can see the trend lines out here. What's most important to take a look at, in my opinion, is that price is consolidating right now in between its daily and its weekly. Really, it's between its weekly profiles. The bottom of the box has held all week long. That's 1897. Resistance has basically been the top of the daily profile. That's 1922. You haven't seen 2 closes above it. So really what gold is doing is just trading in a sideways consolidation mode. There's just not much there other than the fact. What's the fact, Steve-O? The fact is I've got to change over to the charts out here, and then I can show you the facts. The facts are, much like the NQ has given us an intermediate term change in trend signal out here, gold has done the same thing. So with regard to gold, this formed a TD9 count top, bar number 8, price below Stevie's green line. Gold over the long haul, very likely targeting 1730. And it could even target 1490. 1490 is not out of the question out here. But we got to take things one step at a time. And the one step at a time is, hey, Steve-O, on the daily basis, it's just consolidating. And you're absolutely right. We just said that. We can see that on the charts out here. So not until it breaks that consolidation will there be any other specific meaning. If we take a look at silver out here, silver is trading below its daily profile. The daily profile formed above price out there. So that's a bearish message. On the daily time frame, so that's a bearish message. The bullish message is, as we take a look at the daily time frame, is price is above Stevie's red line right now. The red line number is 2454. As long as silver remains above that, you could it's also though just trading sideways, isn't it? Really just trading sideways. So not a heck of a lot going on with regard to silver and gold, other than watching the paint dry. But if we look at the short-term time frame charts, maybe we see something else. What's that something else? Well, we can see an A to B equals CD to the downside. That had completed out here. But still what this tells me is really just more of a sideways consolidation between right now about the 1916 to the 1897-ish type range out there. So not much more to report on gold, so we won't spend any more time there. But we are going to be going into the close in a bit out here. I'm going to close the show out in just a few moments. And I'm sure you're all happy about that. because you want to get a guy that's confused off the air. But what signals is it that I can provide to you with regard to the rest of the day? Is there anything? And I don't know if there is. If we take a look at the 30-minute time frame for the ES Mini, we understand the top and why price moved lower, because it was Rhodes Momentum Indicator signal out here. Price is trading right now. It's back inside its opening ranges. The opening range goes from a period of 34.39 to 34.57. So it's really just kind of consolidating sideways. If price gets above 34.48, expect 34.57. If price can't get above 34.50, 34.48, you may get back down to the lows of the most recent lows from a few hours ago. So is there a really great signal here in the ES Mini? The answer is there's not. Is there a great signal in any of the 30-minute equity futures contracts? And the answer is there is not. The NQ, we'll pull this over here. Here's the weak link out here in the indices. And do we have any kind of a signal? And we don't. Price is trading inside its opening range levels. They range from about 11,617 to 11,682 out there. So, folks, I wish that these signals in the markets were not so confusing, but they are. And when they are, you just admit it. You don't simply try to put forward, or I'm not going to do it, put forward some other type of a view out there. So the S&P 500 is the indice that you should know is the most confusing. Its market breadth is bullish for all time frames. Yet when we take a look at the charts, they signal that it should be bearish. And we need all that to resolve itself before I'm willing to be able to tell you what the markets are signaling to you and I. Have a fantastic Friday and weekend. We'll see you on Monday.